Good morning, everyone. Happy Sunday. Hope you all had a fantastic weekend. My name is Amol. I'm here to do your alpha trades, crypto, and Bitcoin analysis. So if you didn't get to see my video from last Friday, make sure you go check it out. Okay, it's called Boiling the Frogs. It's on our YouTube channel, Alpha Trades. All right, and you can look at it right there. Bitcoin is turning up the heat on frogs. And to understand the explanation of that and what I meant, make sure you go check out this video. Okay, it's particularly important in understanding the psychology behind how the market slowly bleeds out participants and how it eventually gives them a crushing blow right near the end when people don't even realize that they're already down 5–10%, and then the market quickly drops, and then most of these people, quote unquote, get boiled like frogs. Okay. All right, well, let's get to the analysis. I typically just stay away on Saturdays. This Saturday, I decided to inform our viewers, our Advantage members, exactly how price action was going. And for the most part, what I was really seeing is nothing at least to be mentioned, but something to be slightly cautious about is when we were on the 1 hour time frame, I was seeing something like a potential breakout maybe from here. You know, if you look at this descending trend line, right, it has a multitude of touches, like right there, right there, right there, right there, right there, and right there. And I told our members that if this thing actually retests this trend line successfully, from here it's probably going to push up towards 9,500. If we kind of do this grinding behavior and then we start rolling back inside the trend line, I would not be surprised if we drop back towards these lows at least, or maybe even take out these lows. Okay, because we did the whole grinding thing all of Saturday. Today is the day where the futures traders show up, where the real traders show up, and those are the players that actually drive the market. And if that's the case, they will ultimately decide the direction when futures open up tonight at 5 p.m. Eastern Standard Time. For now, this price action is slightly bullish or neutral bullish because we broke out of this descending trend line. And so if you're testing this area successfully, I'd probably figure we're going to push maybe towards where we exited from this sideways chop right here. We'll probably test that area as resistance. And you're probably wondering, well, why is it that we test areas like that? Okay, well, these are the more higher concentrated areas before we largely consolidated and we dropped down. So it's more obvious for price to go back into the area where we spent some time and then exited out of the range. And so that goes to show that more than likely, we're probably going to do that kind of thing, push up here and then possibly roll over. Again, that is if this trend line is tested successfully and we start pushing up from here. If not, this could be a failed breakout and then we just start rolling down from here. On the 4 hour time frame, I've also mentioned the importance of looking at this descending zone of resistance, this green block. Okay, let me get rid of this line. And the importance of that zone is because I've told y'all before that we've established, for the most part, a lower high and lower lows structure. If you're not familiar with that, if this is the key high right here in this whole range, okay, this is the lower high, and this is your first low, and then your first lower low. Then this is technically another lower high, because as you can see from here, it's another lower high, and then this is your other lower low. Now let's just say we want to ignore these last two because it's part of this move that put in this. Okay, so then we'll say, okay, this is your lower high, and then this is your key low. Well, we haven't quite changed structure, right? Because we still have yet another lower high. We have yet to put in a higher low and then a higher high. That is when you get a structural change, okay? Until then, we are technically still in this, which is high, low, lower high, lower low and lower high, another lower low, that kind of thing. So for the most part, if you're looking at this green block, I stated that this is the area, the zone to our community members that if price enters anywhere in this area, you could potentially look to short. Okay, so not investment advice, but that's what I would do. I've been short basically since like 9700s. Okay, way the heck back here. I've also established my mode of thinking, why I've been short, why I've been bearish. Most people have not agreed with me, but that's okay. I think those people are slowly realizing that they're about to be wrong. On the daily time frame, this is another key marker that has been particularly important. Remember, this marker, 94.26, and again, this is Finex, so it could be a couple dollars here and there on different charts and different exchanges, but the marker is same nonetheless, where it's derived from this closing and opening of candles right around this base that was created. Okay, this base that was created, pushed up, pushed down, got rejected, pushed up, again, pushed down, got rejected. All these wicks that you see poking past this area, none of them are able to close below this marker, indicates to me that this is a key pivot for price, especially on the daily level. Once we got this big breakdown of the candle, notice that every time, if this, let's just say, was a fake breakdown past this marker right here, well, I would have expected a strong rebound in the next several days where none of the candles spent any time below this 94.26 marker. In fact, that's not the case though, because this candle to me represents the clear breaking of structure, which is this marker right here. If you want to be a good technicals trader, you have to understand what are the important levels that price should hold above. If you don't establish and understand what the levels are, whether it's on a 4-hour or daily time frame, you're never going to understand the shift in the trend. You're never going to understand where the momentum is taking place once a particular area is broken and how to position yourself. So after this area right here was forced down under on a daily time frame closing, right? Because remember, candle closings are important. When you close this candle below the 94.26, it's making a statement. It's not a complete statement because this is just one candle, right? So then you see these follow-up candles. None of them are really able to fully close above this 94.26 area. In fact, a lot of them would go up, come down, again, come down, go up, come down, and down, and down, right? And so now we saw yesterday's candle close and open fully below that 94.26 marker. And today's candle hit that same marker on the T and now is getting rejected by it. So you can see the importance of this level right here. I would figure that if this level is actually rejecting price, I don't see any reason why we would not go to this larger range low, like I've said before. And I know sometimes my analogy could be a little bit, my analysis could be a little bit more redundant, but it's redundant because I want to help you guys understand how to look at price on a day-to-day basis, because nothing has technically changed. I mean, since I've been talking about this range, since I've been talking about these lower highs and lower low structures, I mean, this has been going on for like a good week or two, right? So I'm going to keep repeating that until something changes. So what exactly are we expecting? Well, if we're looking at this price action right here, we talked about how price got rejected right at this high volume node. Well, if it got rejected at the high volume node, it should probably go to the next high volume node right there, around 8,800s. If this doesn't hold, we should go way the heck down here, 7,576. I don't know if we're going to break this that easily. I would probably figure that more and more bulls are going to step up right here. But again, that all depends on how much supply is out there in the market, how much are the bears willing to step up and dump the supply on the market to give a crushing blow to the bulls. And we'll see, right? I've also spoken about on on my Twitter page. And again, if you're not following me on Twitter, make sure you follow, because I do retweet a lot of stuff. I do have random thoughts through the day. I do have random analysis that I put out through the day. Let's see here. Deribit. Okay. So here's Deribit right here. All right. So what was I going to look up? This is options expiry. Okay, there we go. So on June, right, we have this big options expiry coming up. So this is 26th of June. Okay. 26th of June, we have a big options expiry coming up. We have about $1.6 billion open interest, or about 167,000 contracts. Okay, 116,000 of those are held at Deribit. Now, it's hard to say the exact positioning of the contracts, like puts versus calls, but from what I've seen, there's a lot of puts. There's a decent amount of calls as well, meaning, you know, people are expecting the price to go up. But I think the structure of the market has kind of shown that there's more weakness to this structure than there is strength. So I'm thinking that more of these contracts on the put side will probably pay out much better than the call side, meaning as the market goes down, I think the puts will probably appreciate. But other than that, I don't quite know if those contracts are going to do that well, because we're so close near expiry. I think June 26th is expiry. I saw, I think 1,500 puts bought for the 8,500 contract. Okay, the 8,500 put contract. So that would be really interesting if we make it closer to 8,500 by June 26th. You know, so a lot going on in terms of, excuse me, the option space. All right, let me see here. So by the way, in about 4 hours, we have our live stock market discussion. If you guys want to join, we for the last couple of weeks for June, we've had Austin Ashraf. He's a former Citigroup portfolio manager. He joins us on the call every Sunday. We discuss our positions in the market in the second half of the interview with our Advantage members. So we keep that on a private call. But for the first half, we discuss the stock market. We discuss how overall things are going, whether it's coronavirus related, how particular sectors are doing. And we even discuss a couple stocks in our free side of the discussion. But on the paid side, if you join Advantage, which is 50% off right now, you can get how we are positioned in the market, in the stock market, exactly what we're longing, what we're shorting, what our thoughts are for the week ahead, what particular sectors we think are hot or not. So these are all things that we discuss with our Advantage members. So I think that's pretty much it. I talked about, you know, boiling the frogs. Make sure you go check out Medium too if you just want to read the article of why exactly I have the analogy of boiling the frogs about Bitcoin. I talked about my thesis of how we're going to start breaking down, or, you know, rather we should just continue breaking down. Although this mini structural shift was definitely kind of a change, you know, when we broke out of this descending trend line right here. I told y'all that that is a pretty good break from it. However, we need to see continuation up from it. Okay, until we see the continuation up from it, you know, this could have been a false breakout, and then we're going to roll back inside the trend line and then start dumping. Okay, nothing particular on the oscillators that I'm seeing. Okay, 4 hours still in neutral territory. Again, OBV, which tracks the inflows. OBV stands for on balance volume. It helps you understand if there's actually money going into the asset to push it up. And as you can see, it's been consistently going down. There's really not money coming into the asset to actually show anything that would indicate that we're, you know, that we're potentially going to push up due to the inflows. So in fact, even the OBV is actually confirming that more than likely we're probably going to dump. I think it's just a matter of time. And with quarterly end coming up, guys, in the stock market, what typically happens in the quarterly ends is you have rotations from hedge funds, rotations from other people's portfolio to go into other sectors, maybe hedge and take profit from particular positions that they're in, and maybe go into bonds or other assets or other defensive assets. And the interesting thing is, I mentioned this about GBTC, right? Let me see here. GBTC. Let's pull up GBTC over here. Okay, so let's go to GBTC. All right, so the one thing I'd spoken about GBTC is if you look at it from the daily time frame, right? We've already broken below the middle Bollinger Band. Okay, more often than not, when you start breaking below the middle Bollinger Band and you start heading to the bottom half, you start seeing more of a drop in price. Okay, aside from that, there's this important moving average, which is the 34 EMA. All right, so let's turn this to purple. Let's look up 34. And you're probably thinking 34 is such a random number. It's random because, in crypto, the market itself, especially GBTC or CME markets, because they have such odd closings and openings versus Bitcoin spot, you have to utilize different moving averages to encapsulate their weekend data, their holiday data based on how the spot market is trading with regular moving averages like the 50 or the 100 or the 200. Okay, now the 34 EMA, which I've said again in the Bitcoin Boils the Frogs video, it's particularly important because you can see right here in 2019 when we made that big push up to 13,000, right? GBTC went to almost 17.4. You can see we utilize this 34 EMA support all the way up, okay, all the way up. Even over here, we utilize that support pushed up. Once we start breaking past the 34 EMA and started using it as resistance, it got pushed down pretty hard. Even over here, resistance right there, pushed down pretty hard. Again, support on the way up, resistance, and then sell off. So guess what's happening right now? We actually broke below the 34 EMA. We actually closed a full daily candle under the 34 EMA. So I'm thinking that for the most part, from here, we should start breaking down. Okay, either it's a retest maybe for a wick up or maybe a day or two up, but in either case, I'm thinking this is the structure that's kind of showing us that we are exiting from this sideways distribution range right here. Okay. I think last but not least, I've also talked about the volume analysis, right? Through this whole movement up, we had declining volume. We saw volume heavily come in at the top right there, which is pretty much the high and the resistance that we've held since way the heck back here in October 2019. And then you see price slowly rolling down like this, and then you start seeing volume taper off. So I'm thinking if price starts dropping, we'll probably see volume pick back up. Okay. And I think that is pretty much the essential sign that you typically see in distribution. All right. So that's pretty much it, guys. If you do like our content, make sure you give us a thumbs up. It really helps support our community, support our free content that we do. We often try to do as much as we can to give you guys free content, sometimes, free trades in the market. Even over here in the alt side, I had mentioned this trade right here, XHV, the Haven Protocol thing, okay? This was at 10,999 Satoshis. I don't even know what it is at right now, but I think I mentioned it. Where was it? This thing I mentioned I don't know when it was. Oh, I think it was this, wait a second. I think it was this candle right here, or maybe it was this candle. Yeah, I think it was in the middle of this candle right here where I had mentioned the Haven protocol, right? And you can see, again, it's taken off, right? I mean, quite aggressively. And the first target that I was telling people was 14,863, which we hit, you know, on this particular 3-day candle, okay? So that's, you know, you're up 30, 40% by now. So this is for, again, our Advantage members. Another trade setup that I mentioned was Link, okay? So Link was another one. Here's Link. Link was at 407. Let's see how Link is doing. Let's see how Link is doing right now. 417. Okay, so not bad. Nothing great, but not terrible. 407. So right there to where we are right now. So you're up about 2.4%, right? So, you know, Haven, Link, these are all trades that we mentioned. Oh, and there you go. There's Haven protocol. I mentioned June 19th, 10:30 p.m. or so. So yeah, I mean, it was looking pretty darn good at 10,999. I mentioned it to our Advantage members. Some people got into that trade and they did very well. Took profit, walked away. So this is what you got to do, right? When it comes to altcoins like this, especially Haven protocol, because I personally think it's a shit coin. But in either case, even if it's a shit coin, right, you can profit from it, make money, and get out. That's it. Don't just stay in blindly, because chances are you'll give up your profit and then some, okay? Take your profit, be happy, don't get greedy, all right? And, you know, though I can't provide like financial advice when I give up this information, but this is information that I personally either utilize for trades or information that I would find useful. I'm not going to give my Advantage members, okay, some BS analysis of how some Ponzi coin is having some XYZ event. I don't really care. I think one thing I've understood about altcoins is a lot of them are just garbage, okay? A lot of them are just looking for reasons to move up. And those reasons don't have to be fundamental. They could sometimes be news driven, but more often than not, they're kind of just, you know, someone is just driving up the market aggressively, okay? And these are more often whales or algos. And so if you recognize this pattern, it helps you kind of make some quick gains in the market, okay? So one thing that we do impress upon the community over and over again is risk management is key. That's the only thing you can control in this market. If you don't have a control on your greed, if you don't have a control on your position sizing, if you don't have a control on your risk management, you're bound to fail. You'll never become a successful trader, okay? So that's it, guys. Thank you so much for watching. Again, make sure you join the stock market discussion. It's starting in about 3 hours or so. So I hope y'all come join. Listen to us, myself, Faisal, and our guest speaker, Austin. We always, in my opinion, provide great conversations. And then you could also ask questions. You know, any questions that you have, anything that you want to discuss, we're there to answer your questions. We're there to bring up important points that most people are not discussing. That's it. Cheers. Make sure you hit the thumbs up and take advantage of the 50% off deal that we have going on. All right. Have a great rest of your Sunday.